Good morning, I am Adam Harris, and this is The Day Ahead.
Go ahead and click subscribe below to receive daily market analysis videos and important alerts. On the economic calendar for today, we have a high-impact parliamentary vote on Brexit Plan B today and a likely weaker US dollar in currencies. Oils have started a potential weekly downtrend, while the global indices stumble after a flat day yesterday. In equities, it'll be interesting to see how Apple's earnings report impacts the market over the next 24 hours. You can jump to any chapter by clicking on the time link in the description below. Kicking off with currencies, first of all, good morning to you. And yes, looking and anticipating a stronger euro US dollar today as it heads up towards resistance at 1.1450. Anticipating that today, a stronger euro and a weaker US dollar. Now, with cable, it's been quite strong. It really makes a lot of sense for it to head back down to 1.3 to test that level as a support and resistance, as well as the moving averages. So that makes the most sense for me, but I'm also getting prepared for a swing low here. This is an overdue retracement and would be very nice and sensible and orderly for that to happen. Of course, keeping in mind that today is supposedly all focused around Brexit referendum votes and related voting and politics, so potentially going to see some volatility on that. Then also on my watch list today, Euro Kiwi, a nice little bearish candle at a previous level of support, testing resistance, a break of the low, this being a potential swing entry to continue to trade that lower. And pound yen and Kiwi yen offering similar long setups where effectively price is coming back to test the level of support or retracing back down into the buy zone here and looking for a swing low entry over the next 1 to 2 candles. So these are also on my watch list for swing entries at long. Kiwi yen here, just showing you this on that level of support. Very nice breakthrough, coming back, bullish candle off the level of support and a potential swing entry long from that point onwards. Just wanted to add that to my watch list as well. So then with the commodities, just noting gold now attempting to push through from 1300, heading on towards the next level of resistance at 1311. So far so good, looking as though it very much wants to continue. I'm anticipating at some point some potential resistance here and ultimately a deeper pullback before a longer term climb, but for the moment, shorter term, it's looking quite nice and bullish. Comparing that to silver's weekly setup as well, just to show both the difference between the daily and the weekly. Very bullish, still encountering resistance at 1580, and even the current weekly candle looking nice and bullish. Once it breaks to that, I expect and anticipate a freer flow towards 1600 and ultimately towards 1620, but it's not showing much of that at the moment. Ability to be able to do that on the daily. Palladium, on the other hand, is doing more or less what I expect to see from gold and silver, potentially a very strong bullish start and then ultimately a pullback into this level. Ideally, it would head back down towards this level and a little bit further down before creating a stronger candle and then heading on upwards. So this one, that one having a start and a false start there. Now oil as well doing pretty much what we discussed as well, a nice little bearish candle at resistance and a break of the low of that. So this looking as though it currently is intending on producing a more bearish run to the downside, and so I'm going to be switching to dailies and looking for potential entries short now that we've broken the low of that. Also breaking these previous lows, any pullbacks on the 4-hourly time frames back into those lows are potential shorting opportunities as that continues to head lower. Even here on the UK crude oil encountering some resistance and producing another swing high. This is now looking slightly more bearish than bullish. So with the global indices, actually what I'm looking to see is a move up higher today, looking to see it test levels of resistance, especially here we say close to 24,800, but really looking to see it break through that. It's building up a bit of a consolidation sideways pattern and likely to then ultimately kick up. And so looking to see that build up a bit of a support level, head higher. Looking at comparing it here to the US Tech 100, pulling back, bit of a bullish candle today. We'll see how the US sessions go, and then continue to head up and test that. If I compare that to the UK 100 and look at that, of course, this being, we'll see what happens with regards to the politics today. But we've got that bearish weekly candle break of the low. That actually implies a weaker FTSE there. But then comparing that to Germany as well, the DAX, price actually quite a strong bullish supported candle there and break above the high that through this level of resistance, which show this building up and continuing to build. And that's pretty much the case for both Hong Kong and Australia, both looking quite bullish. So I am leaning towards the upside. We've had a strong pound which has pushed us down a little bit, but overall it's going to have to move up if everything else does as well. And lastly for today, looking at the equities in focus. So I'm really going to be interested to see how Apple performs here. We've got this current bullish candle. We've got earnings coming out after the market today. So given the general bullish nature of the market, it would make more sense for the market to actually gap up since it was lagging behind a lot of the other charts. It would make more sense technically for it to actually gap up. So that'll be interesting to see if that is the case from a technical perspective. And what would make sense is for it to either gap up above this level of resistance, because then it would be a strong catch up, or potentially to at least come back up towards 160, heading towards 165 there, which is a level of support and resistance. That's kind of it, unless there's some big hole in their results which they haven't foreclosed. But I'm leaning towards that being the case, that would actually start to head higher. Of course, we are close to the end of the month, and a nice bullish candle there would make the most sense. Now, the rest of the charts actually not looking as bullish as they were. So in other words, yesterday being a little bit of a bearish day compared to the recent behavior. Netflix still within this. I'm happy to stay within the shakeout period, so potentially price will go sideways. A lot of the charts not necessarily looking as bullish as they were. So for example, just going to Boston Science. So yesterday being a bit of a down day, and markets pulling back a little bit on these, but then going on and having a look at Standard Chartered. Still happy with this overall on that monthly candle. Very nice overall, leaning towards that bullishness. The one that's interesting to me, BP as well. So just noting that mixture of bullish and bearishness, and a bit of a fault that's happening there. Noting BP coming back down now. Definitely looking currently as though it's rejected by that level, failing to get through. It doesn't mean it won't necessarily find its way there next month, but not really looking bullish enough compared to quite a few of the other charts. And so just taking note of that potential, if that finishes as a rejection candle, it fails to get through that level of resistance, and the implications of that. So on that note, ladies and gents, I'm going to exercise some caution today, just because waiting to see what's going to happen with the market a little bit. But yes, if it's trending, I will be there. Just a reminder to hit the subscribe button. If you want to stay abreast of what's happening in the market, I'll be producing and bringing you the latest in the markets every morning in a freshly produced video.